So a lot of people could probably think of a lot of different ways to spend 50 grand. Maybe buy a nice car, put it into a savings account, maybe, just try to keep that principal safe. Me? Well, I just actually let it sit in these 7 stocks. Today, I'm going to do a full portfolio reveal for you guys, including both the positives and the negatives of every stock I own and how much I've gained or lost so far. I'm going to start with my smallest position and slowly move up to a position that takes up more than 30% of my entire portfolio. So make sure you watch until the end to see it. So let's get into it, shall we? So first thing before we get started is that all of this information is based on the close of markets on November 15th, 2022. That's when I wrote all of this information out, so just know that going forward. So with that, my smallest position of the 7 stocks I own takes up only 5.48% of my portfolio between my Roth IRA and my taxable account. That stock is Pepsi. I own 16.391 shares of Pepsi at an average cost per share of $158.03. That means my total cost basis here is $2,590.20. As of the time I'm recording this, Pepsi shares are selling for about $177.17, meaning my position is worth $2,903.99. I've made $313.79 or 12.11% on that initial position. Now, I bought Pepsi for 2 simple reasons. I like the drink and I like the chips. All right, next. No, so in addition to that, I felt that the company was set up really well between the somewhat recent leadership transition. The past CEO, Indra Nooyi, had done a lot of work with the company from a sustainability standpoint, and it was a perfect setup for the current CEO, Ramon Laguarta, to restore growth within the company. Also, not a bad dividend here at 2.6% and 50 years of consecutive dividend increases. Really, I would say the main negative here is the fact that it's such a massive company that you're really not going to uncover anything too interesting that hasn't already been noticed by 100 other Wall Street analysts. I don't plan on buying too much more anytime soon, and if I'm being completely honest with myself, really the only reason I'm still holding on to it is kind of just because I like Pepsi and Lay's. It's honestly more like psychological at this point. I used to own more and have sold most of my stake in recent months, so I don't know, maybe I'll end up selling the rest soon, we'll see. My second smallest position of 7 stocks takes up 6.93% of my combined account, so a little more than Pepsi, but still relatively small. This one you probably haven't heard of since it is a smaller company, but the company is Southwest Gas. I own 56.206 shares of Southwest Gas at an average cost per share of $70.70. My total cost basis is $3,973.57, and as of the time I'm recording this, SWX shares are selling for $65.27, meaning my position is worth $3,668.57. I've lost $305 or about 7.68%. I first bought SWX in June 2021 because I was looking for a smaller utility in the couple $2 billion market cap range. I liked Southwest Gas over others because the stock was down since 2019, while revenue and earnings at the time were still up over that time period. It was a slow grower, but it was valued around 12 to 13 times earnings at the time, much lower than peers. I also like that Southwest Gas Holdings owned its own utility, construction, and repair business within the company called Centuri. I felt the value of that individual business, which was growing much faster than the utility company, was not fully accounted for in the stock price at the time. I started buying the stock and collecting my 3% dividends, and eventually Carl Icahn and various other activist investors started investing in the company in an effort to separate the 2 main businesses there in order to reveal more value for shareholders. The stock moved above $90 per share in early 2022, at which point I sold about half my stake for a more than 30% profit in less than 1 year. I still own shares just to see if any news of a split or other value creation will happen for shareholders, and recently this is looking even better than before as another activist investor named Corvex joined the crowd. So I'm currently actually considering buying more shares since it is below my average purchase price. Now those were just my 2 smallest positions, taking up only about 12% of my portfolio. So remember to watch to the end to hear why my 2 biggest positions take up more than 60% of my portfolio. Now my third smallest position of 7 stocks takes up 8.08% of my combined account. This sounds like a joke, but the company is actually a small farm and construction equipment dealership in North Dakota called Titan Machinery. I own 124 shares of TITN at an average cost per share of $28.30. That means my total cost basis here is $3,509.54. TITN shares are currently selling for $34.50, meaning my position is worth $4,278. I've made $768.46 or 21.9% since I first bought it. The thing I really like about Titan is that it's like the pinnacle of a company that no one knows about and no one cares about. The company is growing at more than 20% per year just from expansion through acquisitions of more dealers in their area. They're maintaining more cash than debt on the balance sheet and are trading near an all-time low earnings multiple. The only reason I have not been adding more here is because the company does have a bit of a shaky past when it comes to expansion, where several years back they basically pulled a Subway. AKA they had too many stores too close to each other and started eating into their own bottom line. The past year or so has also been a really robust farming economy, which has obviously been a great tailwind for the company. So overall, I kind of just want to see how this company fares through tougher times before buying more shares. Now getting to the top 4 stocks I own. My 4th largest position is actually more of a controversial one. The company is a real estate brokerage called Compass and currently takes up 9.37% of my portfolio. I own 1,451 shares of Compass at an average cost per share of $5.88. That means my total cost basis here is $8,536.18. COMP shares are currently selling for $3.42, give or take, meaning my position is worth $4,962.42. I've lost $3,573.76 or 41.87% so far. So this looks pretty bad, but hear me out. Compass is actually growing really fast as they've more than doubled their revenue since 2019. They're significantly more efficient than any other brokerage, considering they have the highest sales volume of any US brokerage while only covering half the country with a fraction of the agents. High agent retention, no debt on the balance sheet, suffering less than the market currently, with the average brokerage seeing a 21% decline in transactions and Compass seeing only a 12% decline. So here's the problem. They're burning cash, and a lot of it. In the first 9 months of 2022, the company used $174 million for their operations, and they currently only have $355 million left. No, but in all seriousness, I think there is potential here. Recently, I actually witnessed one of my favorite stock market moves, which I dubbed the terrible expectations, slightly less terrible results move, which caused Compass to gain more than 50% in 1 week. Everybody's expecting Compass to crumble in this environment. However, we've seen recent cost-cutting initiatives proving to be successful without being a drag on the company. And executives are now calling for positive free cash flow in 2023. So this investment's kind of in a wait-and-see type of stage. My 3rd largest holding is Penske Automotive Group. The company actually does not wholly own Penske rental trucks, even though you might think they would. Instead, most of their business is in car dealerships, truck dealerships, collision centers, and logistics centers. The stock takes up 9.59% of my portfolio, as I currently own 40.325 shares at an average cost of $99.37 per share. My total cost basis is $4,006.91. PAG shares are currently worth $126 a piece, meaning my position is worth $5,080.95. I have an unrealized gain of $1,074.04 or 26.8% on the position. Penske was bought around the same time as Titan Machinery in early 2022, and much for the same reason. It's a simple company that's growing. I like that they're more diversified than many of their peers, and this has saved them from a lot of the decline of the used car market currently. They have a really quality brand name on their consumer services like the truck rentals, which is helpful for assigning a higher worth to the company and can help drive growth as well. With the industry growing through 2021, the company was able to put a lot of their cash to work in acquiring new dealerships and collision centers. I like that the founder still runs the company and that insiders own more than 20% of the shares, so they have a lot of the voting power there. They have increased their dividend every quarter, not every year, but every quarter since 2011. They're also buying back shares at around 1 to 2% 9% per year. They've been paying off debt in recent years. Really, the big negative I see here in general is that it is a more cyclical business, so you kind of have to watch out for that. However, again, I think the diversification as well as the physical expansion has and should continue to help offset any decline from that cyclical nature of the business. So now we're at my top 2 holdings, what you guys have been waiting for. These top 2 companies account for about 60% of my portfolio alone. My second largest holding is about 29.8% of my entire portfolio. The company actually might surprise you because it's actually Target. I own 88.409 shares of Target at an average cost of $196.09. My total cost basis is $17,336.02. TGT shares are selling at about $178.50 a piece, meaning my position is worth $15,781 as of today. I have an unrealized loss of $1,555.01 or 8.97%. So why do I own Target? Well, pretty simple actually. People like Target. And not only do people like Target, but I would actually argue that younger consumers are more passionate about Target than any other retail store. People like to talk about going to Target and buying more things than they ever meant to buy. This is a lot different from people talking about going to Walmart or Dollar General or Costco or anything like that. And of course, as these people keep buying more than they ever meant to, it all just means that they keep putting more money back into my pocket through the dividends. The company's healthy, they're not overextending themselves on the balance sheet, not to mention right now the stock is down almost 40% as earnings have been falling with inflation and consumer spending and inventory concerns. Just overall, I don't really see these concerns turning into long-term issues, and that's why even with the temporary fall in earnings, the stock is still selling at a low earnings multiple, not even taking into account what the earnings will be once the environment improves. So that's why for now, I'm just gonna keep holding and maybe even adding more if the stock keeps going lower. Now onto my biggest holding. This one's actually a little interesting for sure, but hear me out and you'll see why this stock takes up 30.75% of my portfolio alone. This stock is actually a real estate investment trust, or a REIT, that owns offices, and it's called Boston Properties. I own 218.901 shares at an average cost of $94.85 per share. My total cost basis is $20,762.10. The shares are selling at give or take $74.39, meaning my position is worth $16,284.05. I have an unrealized loss of $4,478.05 or 21.57%. I bought BXP during the pandemic when everybody was saying that they were never going back to the office. The stock was selling at a great price at around $100 per share, down from $150 in 2019. They're only diluting shareholders about 1 to 2% per year, while other office REITs are regularly diluting shareholders upwards of 20% annually. They're managing their debt well, they continue to expand and buy more valuable properties, and the whole thing is selling at about 10 times next year's funds from operations. In addition to this, I estimate the real estate the company owns minus the debt is worth anywhere from $16 to $21 billion, while the whole company is selling for $11 billion. I really like their strategy of investing in laboratory office combo spaces, as this space is less cyclical and could lead to better growth numbers for the company. The main negative that I see here is that their 2023 guidance for FFO per share is actually slightly lower than 2022 due to rising interest expense on their debt. However, that floating rate debt is only about 7% of their total debt, so that's why overall I don't see this as a very big issue. Even with this fact, I feel the stock is very undervalued at its current price, and they're paying me more than 5% annually in dividends just to hold on to it and wait for a better value. Because of that, I've been buying a lot more recently. So that's my entire portfolio. Now, of course, it's difficult to cover every little piece of news and information about all 7 of these companies, but that's the basic gist on all of them. Do some of these investments seem maybe a little crazy? Maybe, but that's fine with me because after all, that's why a lot of these stocks are at low prices to begin with. And of course, by telling you guys all this, I'm not recommending that you buy them or sell something else or do anything with this information. Rather, this is just my way of being as transparent and open as possible. So with that, thank you guys so much for watching. Remember to like, subscribe, follow me on Instagram for more stock content, and I'll see you guys in the next one.